everyone, Rosa Helen here with Intero Real Estate. Gosh, it's January 2021. Happy New Year, everyone. Well, to start it off this year, I wanted to interview our in-house lender, Julie Baxter with Prosperity Mortgage. And I wanted to talk with Julie about the real estate market and some, interesting things that are happening out there. How are you, Julie?
I'm very good and glad to join you today. Thanks for asking me, Rosa.
Yeah, absolutely. I don't know about you, Julie, but I'm already feeling like this year is starting off with a big bang. I'm already very busy. What are you seeing? I mean, it's only the second week of January.
So the market in general, there was, a slowdown at the beginning of the pandemic in March or April of last year, but quickly things got figured out as to how to show property. And from May on, the market caught on fire, really. Lenders and mortgage companies saw more business that they could handle. They had to hire additional underwriters and additional processing people just to try to keep up. And so we didn't see the normal slowdown during the holidays. And people have just kept moving through, no slowdown in November, December. And I've got people calling me daily looking to get pre-approved so that they can make offers. And the economists are saying that 2021 is going to be even stronger market, more sales than we saw last year, which was really a banner year.
I believe it. I'm feeling the same. I remember a year ago, same time in January, it was starting to pick up. There was great momentum, but I don't think it was like this, quite literally. I mean, I already personally participated in 2 multiple offers already. And I think buyers are just really gung-ho about getting back into the market, really buying a home this year because of low interest rates. And we were talking offline a little bit earlier. You were even saying that Christmas Eve, people were calling you to get a pre-approval. That's quite interesting to get that call on Christmas Eve.
Well, and the thing is it is because of the virus and the uncertainty in the market and the fact that the Feds had to step in to regulate the market by lowering interest rates. These low interest rates give a buyer so much more buying power.
Yeah.
If you've got interest rates under 3%, the buying power is so much greater for them to purchase something.
Absolutely. So what are rates at today?
Rates are running 2.625 maybe to 2.875, even on a jumbo loan if you have good FICOs. So rates well under 3 we haven't seen these, and I've been doing this a long time. They are saying we are almost at historic low rates, but in all honesty, I can't remember in the last 35 years rates being as low as 2.625, and that's for a 30-year fixed, Fannie Mae type product at 0 points. So they're very low.
What do you think? Are there any predictions on how long interest rates are going to stay this low? What do you think?
Well, the reason they dropped is because the Feds had to step in. They were so fearful, and there still is question about how quickly the economy can recover. But they stepped in. They started buying, controlling the prices of mortgage securities and U.S. Treasuries so that they could stabilize the market. The question now becomes, with the virus perhaps coming under control by the second half of this year, they would hope that the economy would start to recover. They are hoping also that the new administration will have another package to put out to support the economy. And once that starts happening, and they're hoping by the second half of this year, then we would see the potential for rates maybe to bump up a little bit. Now, Will they go to 3% in the second half of the year? That's a possibility. People always ask me, especially those like waiting to refinance, when do you think we're going to hit bottom? And the answer is always the same. We don't know from day to day. You know you've hit bottom on the interest rates when they go up and they don't come back down.
No matter when it is you buy, you can never time when you're going to make that offer, when you're going to make that purchase. But I think there's just no bad times to be buying right now. At 2.5, 2.7, at 3%, those are still amazing interest rates. So I want to talk about qualifying guidelines for a little bit. When we were first hit with COVID last March, I know that many lenders have tightened their qualifying guidelines, increasing down payment requirement and or increasing FICO score minimum requirements. Is that still happening now? Do you see that these, tighter qualifying guidelines have relaxed a bit, or are they still staying tightened?
They've relaxed a bit. Keep in mind that when this first came about in March or April, and we had no idea of how many layoffs there would be and this type of thing, lenders were very concerned. They didn't want to refinance or put you in a property, maybe have you lose your job, or have you go into forbearance and not pay your mortgage. That was not a good business model for them to loan you money if you turned around and couldn't pay them back. So some banks pulled back from mortgage lending companies. They definitely tightened the FICO scoring for a while. That has loosened up a bit. Most all the jumbo lenders that are banks said for a while, you need to put 20% down on a jumbo mortgage. That's anything over the new guidelines, 822. So they did tighten up, and then they loosened up a bit more and said, okay, some of the big banks, 15% down is okay with the second mortgage. So they're working their way to loosen up. We are in the area with all the tech business. I mean, most people have just been able to go along seamlessly, work from home, maybe be able to indefinitely work from home. So we still have strong buyers here. We haven't seen a lot of layoffs. So that has bolstered the lenders' understanding that, okay, we can still lend, we can loosen up the guidelines. So they have loosened up a bit. If you're self-employed, still a little harder because you have to prove to the bank that you are still earning income during COVID.
Mm-hmm. Now, can you remind our audience what the jumbo loan amount is?
Oh, you're going to ask me that, and I didn't. So it changes in November. So off the top of my head, I think the conforming loan limit went to something like 545 or 548, and I believe the jumbo loan it used to be a lower number. It increases every December. They announce it, which is why it's not quite in my brain yet. And I think anything over, I believe it's 822, is considered a jumbo loan. Jumbos are different because they are stricter guidelines. They are investor programs that have the money as opposed to money being backed by Fannie Mae and Freddie Mac. So they are a little bit more strict. You have to have more reserves, money left over after closing. Their FICO scores are a little stricter. So if you buy $1 million property, you put $200,000 down, you fall under the jumbo guidelines with the $800,000 loan amount.
Thank you very much, Julie. It's been so fun talking with you, and I hope all of this information have been useful for all of you buyers out there, whether this is your first time buying, maybe an investor, or you're a second home buyer, a move-up buyer. I hope you find this information useful. Thank you very much again, Julie Baxter with Prosperity Mortgage. I'm Rosa Helen with Intera Real Estate, offering you peace of mind with all your real estate needs.